Thank you for joining us on Squawk. I'm Bruce Whitfield. You're watching CNBC Africa, first in business worldwide. David Shapiro from Sansford and Mohammed Nala from Nedbank Capital are here to unravel the week's news. The only thing I wish I could unravel is my awful tie. But being a good person and not wanting to look a gift horse in the mouth, I've decided to wear it. You come with dignity and dressed appropriately in a very bold, strong, decisive tie. You make me look like an old girl's blouse.
We have to keep it fresh, right, Bruce? I mean, at the end of the day, that makes you look quite good. I must say it's an improvement.
The only thing that makes me look quite good is a big brown paper bag. Mohammed Nala very generously did donate this tie to my wardrobe. And David Shapiro wouldn't be seen in it. Even though he has nearly 300 ties in his collection to date, David Shapiro doesn't have one nearly as garish as this one. Taper tantrums! I think it's quite a nice way of putting it, the taper tantrum, because that's what markets have done over the last weekend.
I'm actually quite sad that US GDP underperformed, and we actually, the belief that the tapering is not going to take place actually pushed markets up. I would prefer to go through the process. We're going to go through it. We're going to normalize, and I'd rather we did it sooner than later. So I'm a little sad that the market has responded the way that it did. I would have preferred to go through the bit of cold turkey.
Because we did say we had the 8% cold turkey. The market pulled back very, very sharply. It was a horrible Monday. It was a horrible Tuesday. Suddenly we wake up on Wednesday morning, and then suddenly the world is going, hold on a second, America's still a bit broken. We could still get lots of Fed money coming into the system. It'll all be okay. Big bounces coming through. Very nice bounces, Tuesday, Wednesday, and into Thursday as well. Mohammed, what's your reading as to the taper tantrum in Ben Bernanke?
Yeah, the irony is that Bernanke didn't tell us anything new. So, I mean, he's been guiding these market expectations for some time. He said, policy normalization would occur by 2014. And that's really, he's stayed the course. He's been fairly consistent. That being said, I think he needed to almost fire an opening salvo to say, we're serious about this. That's what he's done. And I really think, the big sell-off that we had seen was a bit of an overreaction. I'll tell you why I think I said it's an overreaction. In as much as I'd prefer us to correct, to normalize and establish a sound base. Yesterday's GDP data showing you that it's quite fragile. We're likely to have this QE with us well into next year. And he's given himself an exit. He said it's data dependent. So remember, that's the big thing, saying we're serious about this, but...
And now, as soon as the data turns against him, the market goes, well, you see, now this data doesn't support Ben Bernanke, so therefore he's going to continue with QE. It's just a horrible guessing game.
It is, and it's very difficult to second guess the market. And we're not only second guessing the equity markets, we're second guessing the bond markets and second guessing the currency markets, and that makes it very difficult to manage money.
It most certainly does. We saw huge gains in May, because traditionally you sell in May and go away. If you'd done that, you would have been badly hurt because markets went up 8%. If you didn't sell at the end of May and go away, you got badly hurt because markets gave up the whole of May plus anything that was made in the first 4 months of the year. So the entire gains for 2013 were wiped out over a period of a week.
But you have to look through the market, because where have the losses been made? Mainly on the resource shares.
And continue to be.
And continue, but if you're in rand hedges, you're doing pretty well.
Yeah.
So it's not a symmetrical game. It's very
but anybody who believed at the beginning of this year, Mohammed, that this was going to be the year of the undervalued resource stock is so sorely disappointed.
Absolutely. And I think, some of the disappointment that's come through there has been led by the Chinese story. So we had slowing Chinese growth. And again, nothing surprising here, but the markets tend to get a bit ahead of themselves. Those resource stocks have been looking cheap for some time. In fact, you can throw back to Q3 last year. Everyone started saying those resource stocks were looking cheap, myself included. That being said, resource demand and underlying demand is not ticking up globally, and that's really what's hurting prices. And then this whole issue around the liquidity crisis, if you want to call it that, in China, that's certainly putting a bit of a dampener on copper as a metal that they've used in terms of some of their fancy financing or shadow banking systems. And those resource stocks continue to languish. In a South African context, we've got yet another level of complexity, or an idiosyncrasy, if you want to call it that, of the labor unrest, of the rising cost pressures. So those gold stocks down in excess of around 48, going on maybe 50% for the year to date. Platinum stocks not much better, probably down around 38, 40%. That's pretty bleak for the South African mining sector specifically.
Most certainly, and for anybody who took those positions, David, 4 or 5 months ago.
Believe it or not, there's still a lot of hedge fund managers or fund managers in the country that have gone very big on platinum and gold, believing
But
that...
the value fund managers have gone, there's huge value, so they've bought, and then there's been more value, so they've bought more.
That's crazy.
And now you've got Impala Platinum sitting below
Bruce, it's going
$100.
to take a long time for this to turn around. This is not going to be... we went into a 20-year bear market in commodities before the Chinese came and lifted us out into the super cycle. So we've seen that before. The danger is it's not going to be a sharp turnaround. You're going to have to wait for, call it normalization in China, for them to... Their immediate plan is to really lift consumption and lift services. And a boom will come, but it's going to take a few years.
But there were potential asset bubbles that's sitting in China.
Yeah.
The Chinese market down 20% in recent times, suggesting, and again, there's no real technical definition of what bear market is, but it's broadly accepted. Market's down 20%, you're in a bear market. Are we in a bear market in China?
We're in a bear market in Chinese stocks, but not necessarily in the Chinese economy.
Fair enough.
So the Chinese economy will still grow 7.5%, or even give or take a decimal point, which means that there are Chinese consumers. There are people actually in the country who are going to eat, and they're going to buy Prada bags, and they're going to buy BMWs and eat Kentucky Fried Chicken. And I think that opportunity still exists.
Okay, that opportunity still exists. Let's look locally at the huge scandal of the week. And the scandal of the week is something we knew existed, but the outcome finally of the Competition Authority's investigation and their findings into 15 construction companies who together have been fined R1.5 billion. The big three, I think it was Marion Roberts, Wilson Bailey Homes and Avenge, each paying more than R300 million each in fines. Some of these companies have got to go and borrow it to pay the fines, courtesy of the massive profits they generated through cheating 5-6 years ago.
Yeah, and that's an unfortunate circumstance.
Unfortunate? It was criminal.
When I say it's unfortunate, I mean for the country. Given the nature of our industry, I mean it's still a fairly small, tightly woven market, and that opens you up to the potential for collusion amongst these very large organizations. That's certainly what we've seen, and it's not the first time we've seen it. We saw the bread price fixing. We've seen this across multiple industries. So, like you say, the market's certainly expecting this to come through, but I think the quantum of some of those fines, correctly so, more than just a slap on the wrist.
Bruce, we need Bishop Tutu and a truth and record. We do. You know why? Because until we understand how they operated and what happened, there's going to be...
But David, you grew up in this closed economy where Anglo-American owned everything and SAB owned whatever was left. I mean, this was an economy that was closed, where over the years we've seen these assets unbundled. Things have changed over the years, but the habits stayed.
That's exactly the problem. And that's a tragedy that these habits have remained. And you can still see chaps meeting at a club or meeting at a restaurant or a pub deciding how to divvy up the economy. And I thought that would have gone. I thought that things would have changed, but apparently not. So even though we've only looked from 2006, I think for about a 4-year period, can you imagine how long this has continued? And I think it's right. You mentioned in the headlines, that there is going to be some kind of
Well, now the city of Cape Town, bless their cotton socks, has come forward and said, we're very grumpy with Marion Roberts and Wilson Bailey Homes. We tried to, because we were suspicious of the pricing, and they wanted the seating, the cost seating, for example, they wanted to get alternative quotes. They looked around South Africa, couldn't find anything. They looked as far as the Middle East, couldn't find anything, and eventually were obliged to go back to their suppliers to say, okay, carry on. They believe they've massively overpaid. They don't have a number for it yet. But the city of Cape Town, I did ask them, I said to them, is this good politics or is it good business? Well, hopefully it's a bit of both. This is great politics because here is a DA-led council which is now can be seen to be tough on business, which is actually a gift from heaven for that particular provincial government.
We continue to criticize government
for
corruption. And here you are, it's in the business place as well. So where's there to hide?
Precisely.
Who's honest? I'm sure the banks are.
No, I'm sure the banks are terribly honest.
Sorry, you go on. Because
You're so cross.
You know what? I am cross because we've got King 1, we've got King 2, we've got King 3. And we continue to tell the rest of the world, believe me, when it comes to governments, we are leaders in government.
I mean, if you look, going back to the regulatory framework, as David correctly said, it's now that we're getting tough on this, and there's the potential for personal liability on behalf of directors.
Isn't that good?
Yes, because at the end of the day, look, it's going to certainly discourage unscrupulous actions, but it looks after the interests of good governance or after the interests of the public. Yes, it does make the cost of doing business a little bit higher, but it keeps people in line. And I think going back to the banking sector, I mean, there you go, you've got strong regulation.
No, but I've got to say something. We've got FICA.
Yes.
You know, Vika.
Oh,
you know,
Vika will
you
sort
want to
you
open
out.
an account, boy, you better bring everything, you know.
Blood samples.
Everything
DNA,
like that.
and, yeah.
And yet this carries on. I mean, so it just makes a farce of,
But
you know,
as an
of all the amount that we spend on compliance.
But as
to
an
know our
investor,
client,
David,
yeah.
you may have, and I don't know if you did, your funds benefited from a share price in Murray & Roberts that went to $100. You may have sold out at $100, banked the cash, and be buying back in at 25 to 30 Rand. That's the luck of the draw? Or should investors carry some liability if the companies in which they invested benefited from unscrupulous behavior? Should there be a clawback
I
from
wonder,
investors too?
that's quite an interesting perspective.
Because you shouldn't be investing in anything you don't fully understand.
Yeah, we didn't know. We had
shouldn't
no
you know?
idea.
You see, again,
How could we have known?
do
Yeah.
investors have a responsibility? And this is quite a serious question. Should investors go to the AGMs, challenge, question, and when you go in and you profit from underhand activities, should you not carry some of the liability, financial liability?
We wouldn't know, because in this case, that's where your auditors come in. You know, that's
But the
where
auditors will
number
say
one,
they only audit what they're told, because it's not their
Yeah,
job
then-
to scrutinize.
then we wouldn't know it. If
Yeah.
they can't find it, we wouldn't know that these chaps are
So
meeting
finally, liability
surreptitiously.
must sit with management, and they
Yeah.
should be properly held accountable.
Yeah, we can use a few adjectives if you want to.
Okay, which ones? Big.
Drawn, ported, you know.
Let's move on. And then the financial sector's come under scrutiny in South Africa. Well governed, well run, and all that sort of stuff over what are charges.
Retailers seem to be okay. There's
So
been
far.
nothing on the REIT so far. You know, I don't. You know, that'll be hard. To me, I think that is honest competition.
But that is a more competitive space. I mean, you're not going to go from bakery to bakery to buy a
No.
loaf of bread, or from construction company to construction company to get something built. You are going to go and try a T-shirt on in Woolies and try one on in Truworths. for
And I'm
argument's
sure
sake.
there's a chap sitting there who goes in, who works for ShopRite, who goes into Pick and Pay and says, you know, they're selling condensed milk at blah, 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 and you better bring the price down. But I don't think that's collusion. You know, that's just
Price exploration's a lot.
price exploration. We can push our condensed milk up 50 cents. These guys are charging 60 cents more than us. Right, Naspers. What a great business. Decent result coming through. The question that Koos Beck is unable to answer, or refused to answer, declined to answer, chose not to answer, is whether or not the earnings momentum that he's built up within Naspers justifies the multiple. Your thoughts?
And Naspers has been one of those stocks I remember discussing at this very table, and it's been one of those stocks that looks expensive 300 rands ago, and now it's. But regardless of that, I think some of the key things that came out of the results is you're going to see some slowing pace in terms of their acquisitive growth. You certainly saw that almost indicating that you're going to get some degree of tapering. Let's use that word in terms of the growth profile. I know you've liked the stock for a long period of time. It is still looking expensive, but you've seen a bit of a rationalization in their price, and I think a considerable amount of the premium that they charge, or that the price demands, is allocated to that growth profile. So if there's the hint that growth profile may be tapering over the longer term, you're likely to see an exponential or slightly more disproportionate pressure come through in terms of that share price. I don't know what your view is.
David, you still want to ride this pony?
You know what I look at? And I look at the number of people involved in e-commerce, and I look in a country, and Koos Becker showed it on one of the charts, the gains that have been made in the UK, US, and so on. If you project that forward and you look at China, we haven't even started in e-commerce, and they're very well placed there. E-commerce being internet buying, etc. You can't do it here because we haven't got broadband and we haven't got logistics, etc.
And we certainly don't have enough wealthy people in the market to support a substantial e-commerce industry.
But in China, by the end of this year, there'll be more Chinese people using internet to buy things than in America, and that's going to go on.
That's a big number.
And that's what you've got to look at. So I'm saying, I know Koos wouldn't say anything like that, but I still see a massive growth in that side of the business.
David, I mean, the question that begs for me here is that it's a great quality business. You've got gems in there, like the multi-choice business that continues to spit out money, and that's a nice defensive play. But what price do you pay for that Chinese exposure? That's a question you've got to ask.
See, Koos Becker disagrees with the market's analysis that 90% of Naspers' valuation is 10 cent. He gets quite grumpy about that. He gets quite cross. When you suggest it, I said to him, what is the real value? Well, he doesn't know. The market has decided to put a premium. He's got fundamentally strong assets in the multi-choice businesses. Yeah, his media businesses have got their own problems, and they're shifting more to become electronically active. But yeah, is it all about 10
I think
cent?
it's all about e-commerce. It's all about the internet and e-commerce.
Not about the single assets that they've got, but rather the theme.
The theme. I think, that's what I would go. That's where I would go.